Crazy. I'll give it just a second to let people get on, and then we'll get started with some life insurance basics and what you need to know. Nothing too crazy tonight. Just going to go over some general topics, general discussion. Hopefully, you all have some great questions for me. I've got to tell you guys. So, we got cable installed today. Well, Comcast, Xfinity, whatever. This is the first time that we've had TV in 5 years. We've had internet, but not TV. But Xfinity, they gave us a deal we just couldn't pass up. So we went ahead, jumped on, and I've got to say, TV has changed a lot. And life insurance. Yes, Matt, life insurance 101. Everyone dies. That's very true. What do they say? There's two things that are guaranteed in life. You're going to pay taxes and you're going to die. So, but cable, I've watched TV all day today. Since it got installed, it's been pretty awesome. I feel like a zombie kind of. So this is good for me. This is good. So I see we've got some people watching. So I'll go ahead and get started. First of all, I know life insurance isn't something that's crazy fun to talk about by any means, but it's definitely something that's very, very important. And I believe there's a lot of preconceived notions out there, a lot of preconceived misconceptions out there about life insurance in general. So hopefully I will address some of those tonight. If you all have questions, of course, I love interaction. I love when you guys ask questions. To start off, obviously, my name is Michael Weaver. From a credential standpoint, I have been with State Farm now for 6 years, so I've been life insurance licensed for 6 years. I've got multiple awards for life insurance and helping customers out. Been to multiple classes in life insurance and investment classes. I have my retirement income certified professional's designation or degree, whatever you'd like to call it. And last year, I actually was one of the top 1% of State Farm insurance agents when it did come to life insurance and investments, so retirement planning. I think it's important for you all to know that, because one of the first things in looking and talking life insurance is you want to be with a reputable company and individual. You don't want to just get your life insurance with someone that is doing it just for the fun of it, or I don't know. I don't want to say it's with someone that maybe just didn't start, because that's not fair to that individual. But life insurance is a very important thing. You want to be with a company that is financially stable. That's the most important thing with life insurance. You want to be with a reputable company that's financially secure. For example, State Farm, we're the #1 life insurance company in America, along with New York Life. New York Life's another big one. We're billion-dollar companies. Last year, State Farm was a Fortune 35 company. The reason why it's very important to be with a financially stable company is because companies are going in and out of business year to year. So what happens is when a company goes out of business, your life insurance policy is then sold to another insurance provider. So then you get a new provider. So it's very important to be with a provider that is financially stable. They're not going to be out of business in 5-10 years, whatever it may be. Now, in dealing with the person, I think that you should be with an advisor that you know that's going to be in the business for a long time, that you trust, that is educated and informed, just doesn't get all of their education from the company they work with or they work for. You want to be with an individual that goes to seminars outside of the company, that gets college classes based off the topic at hand, that does it full time as a profession. They're a professional. I think that's very important. I mean, if something happens to you, I'm going to be the one that delivers the check. That's why I think it's important to be with someone you trust, that you know is going to be doing this for the next 10, 15, 20, 30, 40, 50 years. All right. So that's my credentials. Need to be with a financially stable company, and you need to be with an advisor that is knowledgeable and educated. So first question of the night, Chris Downing, thank you for the question. Life insurance for someone who is nearing 50. Whole life or term life? That's a great question. I can tell you that 85% of people that I help out with retirement wish they had more whole life insurance or permanent life insurance. Because really life insurance in retirement is different than life insurance in your 20s, 30s, 40s when you have kids. So life insurance in retirement is obviously to cover burial expenses, funeral expenses, but more importantly, most people in retirement age, Chris, want to pass something on to kids, grandkids, churches, charitable organizations, whatever it may be. And life insurance is the most tax efficient way to pass money from one generation to the next. So would you rather pass a $100,000 IRA or would you rather pass a $100,000 life insurance policy? The answer there is a $100,000 life insurance policy because of the tax efficient way. It passes tax free. When life insurance pays out, it's a lump sum check that State Farm, in my example, State Farm would give to you or your beneficiary. I mean, if something happens to you, it goes to a beneficiary, tax free, lump sum amount. Whereas with an IRA, when you pass it, it's going to be subject to income taxes. And I'm not going to go into the details with that, but needless to say, life insurance is the most tax efficient way to pass money from one generation to the next. So I hope that answers your question, Chris. I would recommend whole life as long as if you're looking for something that's going to last the rest of your life, whole life's the way to go. If you only want it to cover the next 10, 15, 20 years of your life, then obviously term life insurance is the route to go. So to get started, let's just look at the definition of life insurance, okay? So I don't know if any of you have a computer handy, but when I look at the definition of life insurance, it pulls up insurance that pays out a sum of money either on the death of the insured person or after a set period. So when you look at Investopedia, life insurance is a protection against financial loss that would result from the premature death of an insured. The named beneficiary receives the proceeds and is thereby safeguarded from the financial impact of the death of the insured. Which is a perfect definition because that's really what I believe. I believe life insurance in your 20s, 30s, 40s is basically an income replacement tool. If something happens to you, I want it to replace your income for your family. Here's one little quote. You don't buy life insurance to make your family rich. You buy life insurance to ensure that they're not poor when something happens to you. Now let that sink in a little bit. Because I hear all the time, hey, I don't want to, if something happens to me, I don't want her or him to be rich. You're missing the point here. You buy life insurance to replace your income because when something happens to you, that income is gone. So you buy life insurance not to make your family rich. You ensure that they are not going to have to be poor and change their lifestyle, sell their house, move schools, so on and so on. So I hope that makes sense. So why buy life insurance? Well, number one, I advise every single person, if your work offers life insurance, get it. Chris, that sounds great. I just saw the comment. That sounds great. But life insurance through work, absolutely get it 100% of the time. I recommend this because it's so inexpensive. You can get usually a max 2 times your income through work for a very small amount of money. I also recommend getting life insurance outside of work. The reason I recommend that is because what happens if you become disabled? What happens if you quit your job, you move jobs? you just can't work anymore. You lose that benefit. And more than likely, if you're becoming disabled, you can't work anymore for some reason, you're probably ineligible for life insurance at that time. So the older you get, not only does life insurance become more expensive, but your body starts to wear out, you develop things that make you ineligible for life insurance. So the younger you are, the less expensive it is, and usually you're healthier. Question from Kyle Nelson. Can you have both term and whole life? Absolutely. And those are really the two types of life insurance there are. There's term life insurance and there's whole life or permanent life insurance. I have a mixture of both on myself. So term life insurance is going to be the least expensive life insurance policy there is for the biggest death benefit possible. And whole life is going to be kind of like owning a home. You pay on it for a certain amount of years, and it starts to build equity, and you have it forever if you want it. Or you can sell it and cash it out, or you can loan against it, just like a home. So since we're going to talk term and whole or term and perm, let's just get into the types of life insurance there is. You've got term life insurance, and this is going to be a very general overview. I'm actually planning on doing, I don't know if it'll be next Sunday or the Sunday after, but I'm going to do Sunday after Sunday of term life insurance and permanent life insurance. I'm going to talk details. I'm going to talk really the goods, the bads, the ins, the outs, and my recommendations. Tonight is a general overview. And hopefully the screen, can you guys see me? Hopefully it's not too dark. I'm starting to lose light outside, but we won't take too long tonight. So term life insurance is, like I said, it's a contract. So it's like renting a life insurance policy. And this is just a basic term life insurance policy. So let's say you get a 20-year term life insurance policy at age 30. All right, from 30 to 50, you have a term policy. Guaranteed payment amount for the 20 years. If anything happens to you, your beneficiary receives the beneficiary amount, which is, let's just say in this example, $100,000, and they receive it tax-free. So that's the benefit of life insurance. Life insurance is the greatest thing since sliced bread. The benefit is always paid tax-free. I can't reiterate that enough. Life insurance is paid tax-free. It's a lump sum check that the beneficiary or family receives. At the end of your term, the policy ends, and you're going to get a letter in the mail from your insurance company that says, hey, congratulations, you've protected your family over the last 20 years. It's time to renew. Go in and talk to your insurance agent or State Farm agent in my case. So now when you're 50, in the example I said, you have to go in and get a new policy. So you either renew another term policy, you buy a whole life policy, whatever it may be. So term is like renting a contract. Now at State Farm, we actually have a term life insurance policy that I really, really like. It's called a term return of premium life insurance policy option. What it is if you get the policy, same concept, it's locked in for 20 years. Just to let you know, statistically, you have a 98% chance of outliving that term life insurance policy. 98% chance of outliving term life insurance. Term life insurance is how life insurance companies make money. So with our term return of premium option, the reason I like it is because it's a forced savings with a death benefit on top. So you get the death benefit amount locked in for 20 years. If something happens to you, it passes to your family. If nothing happens to you, State Farm gives you a check back for every single dollar you ever paid them tax-free. So granted, it doesn't earn interest, but it's also not taxable. It's awesome. One of my favorite policies that we offer that a lot of companies don't. The second type of life insurance policy is a permanent life insurance policy. There's multiple types of permanent life insurance. I like whole life insurance. Whole life insurance is guaranteed. It's amazing. So whole life insurance, as you can picture it, you pay on it for 20 years. So like a house. At the end of that 20, the premium stays the same throughout the whole 20-year contract. At the end of the 20 years, the policy is now paid in full. You now own the policy. You have it for as long as you want it. You have it until the day you pass away, or you can utilize money. So in a permanent life insurance policy, there's what's called a cash value account. So cash value life insurance is another phrase for it. That returns a dividend. A dividend is a kickback that the company gives the policy owner. So you can use this money however you want. You can take loans against it. You can cash it out. Whatever. It earns interest. It's awesome. Some people use it to subsidize help in retirement years, but that's a whole nother conversation. So term is a big death benefit for a little amount of money. Great for young people with kids. Great for young families. You need a big death benefit. I like the term return of premium option. Not many companies offer that, but it's amazing because it's not that much more expensive than a normal term policy, and you're saving all of your money. I hate wasting money, so that's why I love that policy. I have $1.5 million on myself through the term return of premium option that I'm going to get back in 30 years. I'm going to get roughly a check back for $100,000. It's pretty awesome. Permanent, you have forever. You own it. It's like a house. Whole life insurance is the Cadillac of life insurance. But just like Cadillacs, whole life insurance isn't cheap, okay? But it's amazing. So, Courtney, great question. Work life insurance stipulations. So all work life policies are a little different. So some work life insurance policies make you, basically it pays out only if you die while working. Or on the way to work, on the way home from work. It doesn't cover your normal everyday life. Some do. So that would be a great question for your HR department. But with individual policies like that State Farm offers, like State Farm, we have no disclosures in our policies. We have no stipulations. Literally, once you get it and you're approved, something could happen to you the next day and it pays out. So it's awesome. Great question. So I hope that made sense on the differences between term return, and then the permanent or whole life. And don't forget about the term return of premium option. It's awesome. So now we've talked about who you should buy insurance from. A reputable company, financially stable. You don't want a company that could be in and out of business in the next 2 or 3 years. You want to do it with a professional advisor, someone that is educated in the field, someone that does it full time, works with a reputable company, is going to be in the business, in the profession for the next 30, 40 years. That's who someone you trust, someone you have a relationship with, just someone that is a good person in general, someone that has a great conversation with you and your family and really protects you. So we covered who to buy it from. Who should have it? Who should have life insurance? Everyone should have life insurance. Life insurance should start on your newborn baby, all the way up until the day you pass away, age 95. Every single person should have life insurance. I truly believe that. Life insurance is amazing. It ensures that your family is nothing's gonna. If something happens to you, your family can go on living the way they were, with the same income, same lifestyle. It's a must. So we covered term and we covered perm. Okay. Does anyone have any questions so far? Any questions? I won't be much longer. Sunday Night Football is about to come on, so. Here's another little quote for you. The most important type of life insurance there is the life insurance that's in place the day something happens to you. Let me repeat that. The most important life insurance policy there is the life insurance policy that's in force the day something happens to you. And that quote has stuck with me forever because it's so important. we live in a day of age where you have people like Dave Ramsey and Susie Orman that get paid for just blurting out these crazy things on TV. They're great at marketing. They are amazing, but they do not know people individually. Um, I mean, and I'm not going to get into to the whole buy term and invest the rest theory. Not tonight. That'll be something I talk on in the future. But what I would tell you is try not to have preconceived notions about life insurance when going in to talk to a professional like myself, or preconceived misconceptions. Remember that people get paid to market things. And I'm not saying that the term buy term and invest the rest is a bad theory, but it is a theory. Okay, they don't know you individually. Your advisor knows you individually. They know your income. They know your circumstances. They know what you can and can't afford. They know your future goals and plans. Dave Ramsey and Susie Orman don't know that. Okay, that's as much as I'm going to touch base there though tonight. However, this will be a Sunday Smarts when I probably talk the whole Sunday Smarts episode about buy term and invest the rest theory, because I don't completely agree with the theory. Like I told you earlier, life insurance companies make money off of term life insurance. That's their number one income, because only you outlive the policy 98% of the time, so only 2% of term life insurance policies pay out. Let me also say you need the coverage though. So yes, you only pass away 2% of the time, but if something does happen, you need the term life insurance policy because of the benefit there. Kyle, that's a great question. It's going to be based off of your age, male, female, your medical records, things of that nature. So if you do want a price though, instant message me and I will look it up this week for you for sure. Oh, yeah. Yeah, that's, you get a lot. You get a lot. I don't get it either. Why won't it work for us? Let's see. So we've got, does anyone else have any questions? I know Sunday Night Football is about to come on. I think I covered who to buy it from, what life insurance is, the different types of life insurance, term and perm. Okay, I got you now, Cindy. Yeah, you don't get it either. That's right. Their theories don't work for everyone. That's why they're theories. So that's why it's very important to talk to a professional. Tell them what your goals, your plans are, what you want in retirement. The money you want to pass to kids or grandkids. Maybe you don't want to pass any money. But it's definitely a conversation worth having. You just can't base it off of a book you read or a class you take. You want to talk to someone like myself that's in the industry that does this every single day, that continues to get education, because things are always changing. Courtney, you're taken care of, by the way. You know that. I guess lastly, the last thing I'll end with before I leave tonight is I truly believe that if you're a family and you have a kid or two, that you should really recommend having $1 million in life insurance. The reason I recommend $1 million is because of the low interest rate environment we live in. Think about it. At a 1% return on $1 million, that's 10 grand. Your family can't live off of 10 grand. So just think about it. But I recommend $1 million at a minimum. At a minimum, I like to see families with at least 5 years of income if something happens to one of the mom or dad. And if you're a stay-at-home mom, you need life insurance as well. You have a 24-hour, 7-day job. Your job is maybe the hardest job in America, quite frankly. So don't think that just because you're a stay-at-home mom, you don't need life insurance. Every single person needs life insurance. But at a minimum, I like the 5-year income replacement rule. That's what life insurance is to me. That's the conversation I have with customers and clients, is if something happens to you, how much income do we need to continue to come into the household until mom or dad are able to get back on their feet, get back to working, get an income coming in, figure out, okay, we need to pay this off, we need to pay that off, basically to make things work. All right, guys. I think that's about all I had. Does anyone else have any questions? Again, I know life insurance isn't always the funnest thing to think about. It's not always the funnest thing to talk about, but it is definitely something that you need, you want. Don't put to the side. Don't put off. You can buy very inexpensive policies to protect your family, or you can buy very, I don't even want to say expensive, because life insurance really isn't. Some life insurance policies are expensive, but if they fit within your budget, they're not expensive. All right. Anything else? Anything else? Well, if no other questions, thank you all for your questions. Thank you for participating. I appreciate you all watching, your support. It means a lot to me and Courtney. Hopefully these videos are educational more than anything. But again, thank you guys. Hopefully you have a fabulous week. If you have any questions between now and Wednesday or next Sunday, please instant message me, Facebook me, text me, call me, whatever. And I'm just going to give a shout out for Weaver Wednesday this Wednesday at 7 o'clock. We're going to have some guest appearances, so hopefully you guys are excited, and we will go from there. So thank you guys again. Have a great week. Have a fabulous Monday and a great evening.